Welcome to the official video overview for the proposed initial public offering of MK Sons Fine Jewels Limited, the company. We are a retail-focused jewelry company engaged in the marketing and sale of a wide range of gold, diamond and cubic zirconia CZ jewelry through our own chain of retail showrooms since 2012. Caution: investors are advised not to rely on any other document, content or information provided in respect to the initial public offer on the internet or online websites, social media platforms or microblogging platforms by influencers. Investors are advised to rely only on the information contained in the offer document and price band advertisement for making investment decision. This video is directed at and is intended for distribution to and used by residents of India only. The information in this video is not for publication or distribution directly or indirectly in or into the United States. No parts of the contents of this video shall be copied or duplicated in any form by any means or redistributed. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead manager BRLM and the company that you are the intended recipient of this video and you are located in India. If you are not permitted to view this video or are in any doubt as to whether you are permitted to view this video, please exit this video. You are viewing this video on the basis that you have confirmed your representation, agreement and acknowledgement to the book running lead manager and the company that you are the intended recipient of this video and you are located in India. Investors are advised to read the draft red herring prospectus dated May 11, 2026 DRHP along with draft abridged prospectus dated May 11, 2026 DAP before taking an investment decision in the offer. Initial public offering of up to 17 million equity shares of face value of Rs 10 each, equity shares of MK Sons Fine Jewels Limited, company or issuer for cash at a price of Rs per equity share, including a share premium of Rs per equity share offer price, aggregating up to Rs million, comprising a fresh issue of up to 13,600,000 equity shares of face value of Rs 10 each, aggregating up to Rs million by the company, fresh issue, and an offer for sale of up to 3,400,000 equity shares of face value of Rs 10 each, aggregating up to Rs million, offered shares by Ramchand Murlidhar Raimalani, the promoter selling shareholder, offer for sale and together with the fresh issue the offer. The company was originally incorporated on January 12, 2012 and its registered office is at 1 and 2 AN Chambers, Turner Road, Bandra West, Mumbai, Maharashtra 400050. About company. MK Sons Fine Jewels Limited offers a diverse portfolio of contemporary and bridal designs with a focus on craftsmanship, design quality and customer-centric jewelry collections. They have established presence in the retail jewelry markets of Maharashtra and Gujarat by expanding their retail footprint across Mumbai and Ahmedabad, two key commercial centers in Western India. The company currently operates 3 showrooms in Mumbai and 2 showrooms in Ahmedabad and has developed recognition as a regional jewelry brand in these markets. The company is committed to serving the Western India market with jewelry certified by the Bureau of Indian Standards BIS hallmark through their 5 showrooms located across Mumbai and Ahmedabad with a total operational area of 6,513 square feet as of December 31, 2025. Our products. The company offers a diversified jewelry portfolio comprising more than 17,452 stock-keeping units (SKUs), enabling them to cater to a wide range of customer preferences across multiple price points. As of December 31, 2025, the company's product portfolio across their retail showrooms included more than 13,322 gold jewelry designs and over 4,130 designs featuring diamonds and other precious stones. The company's jewelry collection spans various product categories including rings, earrings, necklaces, solitaires, bangles, bracelets and Mangal Sutras, allowing them to cater to diverse cultural occasions, gifting requirements and everyday wear needs. The company's product selection strategy focuses on offering a balanced mix of traditional and contemporary designs that resonate with regional cultural preferences while also reflecting evolving fashion trends. The company's collections include daily wear jewelry, occasion-led pieces and diamond-studded jewelry designed for weddings, festivals, family functions and other celebratory events. Over the years, the company has consistently refreshed their product offerings by introducing new collections to ensure that their portfolio remains aligned with changing consumer tastes and local market demand. As of December 31, 2025, the company offers various types of jewelry under 11 different collections. The company's jewelry incorporates gold, diamonds and other precious stones. As on March 31, 2026, we had 134 permanent employees. As on date of the draft red herring prospectus, obtained registration of our trademark under classes 14 and 35 from the Registrar of Trademarks, India under the Trademarks Act 1999. Risk factors. Investors should note the following important risks before taking any investment decision in the offer. A significant portion of our revenue comes from our showrooms in Gujarat, where our operations are heavily focused. In 9-month period ended December 31st, 2025 and fiscal 2025, 2024 and 2023, our revenue from our Ahmedabad showrooms stood at rupees 2,266.88 million, rupees 2,251.39 million, rupees 1,625.36 million and rupees 0 million, contributing to 62.40%, 77.17%, 74.79% and 0.00% of our total revenue from operations of the company. If this region or the showrooms in Gujarat face any negative developments, it could harm our business performance, growth potential, financial health and overall profitability. Our inability to effectively market our products could affect customer footfall and consequently adversely impact our business, financial condition, cash flows and results of operations. Our ability to sustain revenue growth and profitability is dependent on converting existing customers into repeat customers and acquiring new customers in a cost-effective manner. If we fail to achieve this, our business, financial condition, results of operations and cash flows could be adversely affected. Our ability to introduce new designs and update our collections in line with evolving customer preferences is critical to our business success. If we fail to anticipate or respond effectively to changing trends, our business prospects, results of operations and cash flows could be adversely affected. As of 9 months period ended December 31st, 2025, fiscals 2025, 2024 and 2023, our inventories were rupees 2,405.92 million, rupees 2,056.96 million, rupees 874.81 million and rupees 448.12 million respectively. Our inability to maintain an optimal level of inventory in our showrooms may impact our operations adversely. Any delay on a supplier's part may adversely impact our inventory levels. Investors are advised to carefully read risk factors on page 23 of the draft red herring prospectus to have an informed view before making an investment decision in the offer. The promoters of the company are Ramchand Murlidhar Raimalani, Neelam Ramchand Raimalani and Kush Ramchand Raimalani. As on the date of the draft red herring prospectus, our promoters collectively hold 42,690,360 equity shares of the company, representing 100% of the issued, subscribed and paid up equity share capital of the company. Details of the shareholding of our promoters and members of the promoter group of the company. As on the date of the draft red herring prospectus, our promoters and members of the promoter group collectively hold 42,690,660 equity shares of face value rupees 10 each, equivalent to 100% on fully diluted basis of the issued, subscribed and paid up equity share capital of the company as set forth in the table below. For further details, please see capital structure on page 73 of the DRHP. 96.25% of the company is held by the promoter selling shareholder, who is selling up to 3,400,000 equity shares individually. Please refer capital structure on page 73 of the DRHP for details of promoter selling shareholder. As on the date of the draft red herring prospectus, our board comprises of 6 directors, one of whom is the chairman and managing director, 2 whole-time directors, including 1 woman whole-time director, 3 are non-executive independent directors. For further details of our board, see our management on page 191 of the DRHP. MK Sons Fine Jewels Limited's revenue from operations stood for 9 months period ended December 31st, 2025 stood at rupees 3,608.21 million with a PAT of rupees 291.65 million and an EBITDA margin of 13.36%. Revenue from operations as on March 31st, 2025 stood at rupees 3,512.80 million with a PAT of rupees 232.62 million and EBITDA margin of 10.98%. As on March 31st, 2024, revenue from operations stood at rupees 2,173.23 million with PAT of rupees 81.65 million and EBITDA margin 5.92%. And as on March 31st, 2023, revenue from operations stood at rupees 249.12 million with PAT of rupees 13.39 million and EBITDA margin 9.11%. For any further details of our financial performance indicators, see management's discussion and analysis of financial condition and results of operations on page 287 of the DRHP. For any further details of our key performance indicators, see basis for offer price on page 98 of the DRHP. The following table sets forth a summary of the litigation proceedings involving the company, directors, the promoters and the group company in accordance with the materiality policy on outstanding litigation. For further details of such outstanding legal proceedings, see outstanding litigation and material developments beginning on page 319. The net proceeds are proposed to be utilized for funding expenditure towards setting up of one new showroom in Maharashtra, new showroom, and expansion of existing showrooms in Gujarat, expansion, repayment and or prepayment in full or part of certain borrowings availed by the company, and general corporate purposes. For details, see objects of the offer beginning on page 89 of the DRHP. This offer is being made through the book building process in compliance with Regulation 6(1) and 31 of the SEBI ICDR regulation, with allotment of not more than 50% of the net offer to QIBs, not less than 15% of the net offer to non-institutional investors, and not less than 35% of the net offer to retail individual bidders. The equity shares are proposed to be listed on BSE and NSE, and the book running lead manager to the offer is Aryaman Financial Services Limited. Investment in equity and equity-related securities involve a degree of risk, and investors should not invest any funds in the offer unless they can afford to take the risk of losing their entire investment. Please read the draft red herring prospectus dated May 11th, 2026 DRHP, along with draft abridged prospectus dated May 11th, 2026 DAP, and any corrigendum or addendums thereto. Neither the company nor the promoters are seeking any investment from you based on this video. This is a video for information purposes only and is not a promotional video and does not constitute an invitation or offer to acquire, purchase or subscribe to the equity shares of the company. Potential investors should wait for the red herring prospectus to be filed in relation to the offer for making any investment decision.